2442.75 entry long limit. That is correct. Right over here. Let me remove this off the chart here. And that's for Jeff. That's correct, Jeff. 2442.75 long limit. This is the ATO 2, ATO 2. 100%, Jeff. So if the price touches about 24.46, if the ATR is 3 1/4, do you cancel the order since the target was already hit? Well, you cancel the order because the target's already hit for the Atlas line, but now you're looking at a different signal altogether, Jeff. What you're looking at here is to go long. The target is 2 1/4 points, right? So if you look at the current conditions, 2 1/4 points, long 24.42.75. The target is 24.45. That is the ATO2 signal right there, Jeff. So remember, the rules are very objective. The entry, what are the conditions? These are the conditions. What can I expect out of the trade? 2 1/4 points. Because that's 1 times the ATR. If the trade doesn't work, right, it could always fail. Time-based stop and a catastrophic stop gets me out of the trade. If it touches the actual target, limit order, 24.45, get out, right? Market if touched, close the position, get out at market, because it may not go through it. Just like I spoke about first come, first serve here. If it touches 24.45, which is here, it may just touch it and bounce off of it. Everybody else except you gets filled. Manage the trade. Don't let that turn into a loss. Okay, Jeff? Donnie says here, if you get a signal and miss the fill, what is the rule? Do you let come back and then fill your order? If you miss the signal, Donnie, the one thing I want to say is, has it made the target already? So your question is, if you get a signal and you miss the fill, which happens, right? Limit orders especially, make sure that it hasn't yet hit the target. If it hasn't, you can still go long, maybe a better price even, right? If it goes against you a little bit, or if you're within a tick, you're fine. But if it's hit the target, I would say the trade is fulfilled. It's over. I wouldn't mess with it any longer. Okay, that was for Donnie. It's all price action. It doesn't use any indicators. And this is actually taught. I teach this. I don't want anyone to just put software on your chart and then follow the signals. I want you to understand how it works, why it works. Anticipate there's going to be a signal. Understand as much as possible about what you're doing and the risk that's involved with the trade you're about to take. If it's too risky, you leave it alone. So it's not just following software blindly. I like to actually show you and teach you these methods. Oh, if the target never gets it, well, then you have to get out. Usually a stop, Jeff, would be 4 or 5 candles maximum to stay in the trade. You close out the position. You always have to have some type of catastrophic stop to get you out of the trade, which is always based off the ATR, and you always have to have a time limit, how long you're willing to stay in the trade. You got it, Jason. Okay. I wanted to spend an hour with everyone. Nice full room today. Thank you for attending. Hopefully, not that I want everyone to trade live as I'm showing you these signals, but hopefully you learned something, not just software related, but a little bit on trade management, how to approach the markets. Be careful when you trade, obviously. Understand the risks involved. And if anyone has any questions, would like to join the group class, there's still availability August 28. Give me a call and we can take a deposit by phone to reserve your seat.
Ka-ching! Ka-ching!